Welcome to ShortView Trading. This is your morning market hit for Friday, 11th of June. What matters today for traders? Well, it's been another fascinating week in markets with a pretty sharp rally in bonds and therefore yields moving lower, weakness in the 10-year bond yield, which broke convincingly below its 50-day moving average. And that continued to support the tech and long duration growth parts of the US equity market. You can see the Nasdaq, for example, which has now retraced most of its late April and early May losses. It's now knocking on the door of its April highs, while at the same time, Bitcoin, another key leadership part of financial markets, has performed well after its sharp sell-off in May. It's now held and tested its 200-day moving average twice and appears to be base building. That move in bonds has caught many off guard, particularly yesterday when the move in yields persisted despite that stronger than expected CPI inflation. That's what we had in April. We had it again, a significant upside surprise. This chart shows the core month-on-month CPI, which came in at 0.7. The market was going for 0.5. And despite that, the bond market rallied again. All of that, of course, has tested our thesis laid out at the start of this week on Monday that US equity markets should come under pressure this week, and that's resulted in lower conviction in trading the short side of this equity market. We update our view on equity markets every day in our daily trading publication. It's available on the website to subscribers, but we also offer a free trial for 7 trading days. And really the view that we publish is driven by the signals we get from our short-term models. Like this one you see on your screen now, it's the put to call ratio, and it currently shows that there's a distinct lack of downside protection in portfolios. In other words, markets are complacently priced in the near term. They're vulnerable to negative news flow. It's indicators like this that have been making us concerned about some give back in markets. Equally, some of our models have started rolling over and they're now mid-range. Like this one, it's our risk appetite scoring system. It was on sell, it's now neutral and somewhat mid-range. Typically, signals from this model are timely. They've been very accurate in picking key near-term turning points in the S&P in recent months. So what now? How are we trading this market? We'll have a look at our daily trading publication for detail on that. What are we watching today? Well, out of the US in terms of data, we get the University of Michigan Consumer Sentiment, the first reading for June. We've also got speeches from a number of central bankers. Cunliffe, Ramsden and Bailey all speaking from the Bank of England, and we've got a speech by Sunak, the UK Chancellor. That was your morning market hit. Do follow us on YouTube, search under ShortView Trading. Join us on Twitter, LinkedIn and or Facebook. Thanks for listening.